Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing SBLK stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 3.1 billion market cap. They're trading at $27 a share, and they have 115 million shares outstanding. SBLK Carriers is a Greek-based shipping company. They own and operate a diverse fleet of dry bulk vessels that transport bulk commodities, including iron ore, minerals, grain, bauxite, fertilizer, and steel products. And they deliver the products through many routes all around the world. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They had a lot of free cash flow in 2021. It grew 17% into 2022. That was the peak, 744 million. Then it went down 57% to 318 million in 2023. Up a little in the trailing 12 months to 332 million. Really nice margins. It was above 50% in 2022. It still looks really good. 34% is a great free cash flow margin. Net income is the profit or loss on the income statement. It's revenue minus expenses. That was almost 700 million in 2021. Now it's down to 200 million in the trailing 12 months. Still respectable margins. Anything north of 20% is good in my book. But of course, 48% is ridiculous. Revenue is the sales for the company, and that went down from 1.4 billion to 1 billion. As you probably know, this company is highly dependent on shipping rates. When shipping rates get really high, so does their revenue and profit and their stock price, and vice versa if shipping rates gets low. They pay a phenomenal dividend, 11%, which cost them $343 million, and their free cash flow is a little less than that, so it's not really sustainable, but they can afford a 10% dividend, and if free cash flow gets higher like it did in 21 and 22, the stock price will go up, so will their dividend. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 5.9 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $5.5 billion. We divide that by 115 million shares. And we get a calculated stock price of $48. They're trading at $27, so they're trading at a 44% discount. It's a strong buy according to the model. There are 31 companies in the same industry as SBLK, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend 300 million in CapEx. CapEx are the investments in property, plant, and equipment. So when they buy a new vessel, that goes into CapEx, and the cost is put onto the balance sheet and depreciated over its useful life. It's depreciated onto the income statement. Debt to equity ratio is equal to the median, 0.7. For every dollar of equity, they have 70 cents of debt. They pay a really high dividend, but two companies pay higher, Diana and Grindrod. I love that name. They rank 4th in market cap. They should be higher than Golden Ocean and Zim. They're trading at 1.5 times book value. They're trading at 15 times earnings. Better than the average, worse than the median. 9 times free cash flow, which is usually a really good multiple, but that's worse than the median. 3 times revenue, that's on a higher end on this list. When I say 3 times revenue, I mean their market cap is 3 times their revenue. They generate 1 billion of revenue, far behind Zim. And if you put $10,000 into this company 10 years ago, after 2 or 3 years, you would have been down to $1,000 and you would have been depressed and upset. But if you held on, you're getting closer to your cost basis. If you bought any time between 2017 and 2021, you're probably up 200-300%. Let's take a look at the company's first quarter earnings results. Net profit of 75 million, EPS of 75 cents. EPS is earnings per share. It's net profit over shares outstanding. All their revenue is voyage revenues, 259 million, up about 12-13% from the first quarter of 2023. Net income up about 50% from 46 million to 75 million. Operating cash flow, 114 million, up from 83 million. Remember, operating cash flow is net income converted to cash. so we strip out the non-cash items on the income statement. EBITDA is similar to operating cash flow, $126 million. EBITDA is earnings before interest, taxes, depreciation, and amortization. EPS went up 100% from 45 cents to 89 cents. Vessels went down from 127 to 113, so maybe some older vessels got scrapped, or possibly they sold some vessels to another company. TCE, time charter equivalent revenues, $195 million, up from $156 million. The way to calculate TCE is you take your voyage revenue minus the expenses, and then whatever that number is, you divide by the number of days the ship was in voyages. All the number of days the ship was used in voyages. This is a good way to compare companies. It makes them equivalent. Because you can't really compare profit or cash flow or revenue, because obviously if you're a really big company, you have higher revenue. So to compare companies on a percentage basis, you have to do things like this. It's like the PE or price of sales. It puts all companies on a level playing field. The daily operating expenses per vessel is up a little bit, $4.9 billion to $5 billion. That's not bad because expenses are getting higher with inflation. They declared a 75-cent dividend, which is the 13th consecutive dividend payment. So they've been paying a dividend since June 2021. They did a merger on April 9th with Eagle Bulk Shipping. After this merger, they're going to have 161 vessels in their portfolio. The average age of their vessels is 13.5 years. That's about the half-life. Most shipping vessels last from 20 to 30 years. Here's some more info on the dividend. It's going to be payable on June 20th to all shareholders on record on June 6th. And the ex-dividend date is June 5th. So you have to own the stock on June 4th or before to get that dividend. Here's some more info on the Eagle merger. Each Eagle shareholder will receive 2.62 shares of Star Bulk common stock. Since this merger, they took Eagle common stock off the market. It's been combined with this company's. And following this merger, this company received $104 million of cash. During the second quarter of 2024, the quarter we're currently in, the company has already collected $54 million from the sale of vessels and expects to collect an additional amount of $76 million with respect to the sale of 7 vessels. So that's about $10 million per vessel. Subsequent to these sales, they paid down $11.2 million of debt, plus an additional $11.4 million. That'll happen this quarter in the second quarter. In the first quarter of 2024, they took delivery of the new building vessel Stargazer. That's an Ultramax vessel. Ultramax are medium-sized vessels. They are larger than a Supermax. And these vessels usually carry a weight of 60 to 65,000 deadweight tons. They also added Star Voyager and Star Explorer, 2 new building Kamsarmax vessels. Kamsarmax are bigger than Ultramax. They usually carry around 80,000 deadweight tons, so maybe 30% bigger. Since February 2023, they sold 23 vessels for proceeds of $479 million. And that's mainly to finance the purchase of 20 million shares from Oaktree at an average price of $19. After the Eagle acquisition, they have 114 million shares outstanding, but they did issue a convertible note. On a fully diluted basis, it's 119 million shares outstanding. Here are the daily rates for the Ultramax and Supermax, $17,600 per day. The post-Panamax, Kamsarmax, and Panamax vessels, $15,000 per day. Newcastle Max and Capesize, the big ones, $27,000 per day. The reason they call it a Panamax is so it can pass through the Panama Canal. Not all vessels can. Some are too big to pass through. Let's look at their income statement. Revenue, $224 million up to $259 million. Voyage expenses went down a lot from $67 million to $57 million. Operating expenses, $51 million. Depreciation, $31 million. Operating income went up a lot from $59 million to $94 million. Net income also went up a lot from $45 million to $75 million. Look how much their shares outstanding went down from 103 million to 83 million. Let's take a look at their balance sheet. Current assets, $446 million. Current liabilities, $311 million. So a good current ratio. Total assets, $3 billion. Most of it are the vessels, $2.4 billion. And liabilities, $1.3 billion. The biggest is long-term debt, $916 million. Assets minus liabilities equals equity, $1.7 billion of equity. Let's look at their statement of cash flows. Operating cash flow went up a lot from $83 million to $114 million. In their investing section, they had a cash inflow of $73 billion. In their investing section, they had a cash inflow of $73 million. Most of that from the sale of vessels, $94 million. And they spent $22 million on buying other vessels. In their financing section, they had a cash outflow of $180 million. They paid down a lot of debt, $97 million plus $45 million. And they paid $38 million of dividends. A lot less than last year of $62 million. Because their stock price came down, they wanted the yield to be in line with the stock price. They have 16 less vessels than last year. Last year 127, now 111. The daily rate went up quite a bit from 14,000 to 19,000. Let's look at them on Simply Wall Street. Its last price 27, 3.1 billion market cap, flat in the past week, up 45% in the past year. Let's see what they say about the company. SBLK engages in the ocean transportation of dry bulk cargoes worldwide. Its vessels transport a range of bulk commodities, including iron ores, minerals and grain, bauxite, fertilizers, and steel products. As of December 2023, they owned a fleet of 116 dry bulk vessels with combined capacity of 13.1 million deadweight tons, consisting of Newcastlemax, Capesize, Post-Panamax, Kamsarmax, Panamax, Ultramax, and Supermax vessels, with carrying capacities between 53,000 and 209,000 deadweight tons. They were incorporated in 2006, based in Marisi, Greece. Here's their stock price since they started trading. It looks like they started out pretty high, almost $60 a share. And just after 2 months, it reached its peak at 79. And then 14 months later, it went from 77 to $1.80. I bet a lot of people thought the company was a scam, but they hung in there. They definitely rebounded. It got up to $12 in 2017, then traded sideways for a couple of years. Came down to about $7 in 2019, up to $12 by the end of 2019. Then by May 2020, it came down to $4. It would have been an amazing time to get in because exactly 2 years later, it jumped way up to $34. That was in May 2022. But you can see how volatile the stock is. It comes way down, then goes up, then comes way down. So is this an uptime or downtime? Who knows? Simply Wall Street seems bullish at $39 a share. They say it's 31% undervalued. 6 analysts priced this stock at $31. Their revenue forecast for 2024 is $1.1 billion, then $1.15 billion, then $1.2 billion. Free cash flow forecast is $648 million for 2024, then $500 million, and then $500 million again. They had pretty much no debt in 2013. Then they started adding some in 2015. It peaked at $1.6 billion in 2020. It's come down a little bit. It's currently $1.1 billion. But their equity is usually higher than their debt. Right now, equity $1.7 billion. And they keep a little bit of cash on their balance sheet, enough to pay the interest on their debt. They have $266 million of cash. They're going to pay their next dividend on June 19th. The ex-dividend date is June 5th. And this stock has been pretty popular with a lot of dividend investors, because it went up from 2% in 2019 to 35% in 2022. From December 2021 to December 2023, for 2 years, the dividend was north of 20%. What goes up must come down, and now the dividend is 5.8%. That's as of March 10th. In the beginning of June, the stock price has come down, so the yield is up again in the double digits. The forecast is 11% by 2026. 60% of the companies owned by the general public, 35% by institutions, 4% by insiders, and 2% by private companies. The Nashville Asset Manager AllianceBernstein is the biggest shareholder at 4.7%. The CEO owns 3.5%, then BlackRock, Brookfield. Morgan Stanley owns 1%. Wells owns 0.5%. RAM owns 1/3 of 1%. And their employee count was 249 in 2013. It's down to 216. And the ticker trades on the NASDAQ and Deutsche Börse. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.